So the S&P 500 falls through the floor and then pulls her skirt up to let us see something. It's showing us something. It looks like the bulls are trying to step in. Are they going to take over, or we're going to continue lower? Let's talk about it.
Secure the bag, yeah, that's the brand, and we get to the bag. These private
What's going on, family? Before we get into it, I want to welcome you all back to another STB Market Watch. Now, who am I for all of my newcomers? My name is Tay Sweat. I am a stock trader, futures trader, options trader, crypto trader. I'm a trader, right? And I'm able to do this because I have the information and the knowledge that it takes to trade pretty much anything. If it has a chart, we can trade it. If it has any tie to economics, we can trade it. And I'm going to show exactly what I'm talking about and exactly what I see in the markets each and every day. The market is open. We're going to be here and we're going to be teaching, unless there's something I need to handle, right? I'm going to be here. I plan on being here every day the market is open because I want to break down and let you all know what I'm seeing. And I just post it here to YouTube, right? I do this for my free Discord group. And then, of course, I have to be active for my, I also have a program, STB VIP program, and my STB Discord, where I have to be active for them. So I'm just always active here. But I also want to make sure that I'm giving and showing what it is we do and teaching for free, right? Because I do believe that financial empowerment should be for everyone. And of course, the more you empower yourself for free, the more you can start to invest in yourself and then do even more, right? So that's what I've done with my life. And that's what I see that a lot of people are doing. And it's been helpful to start free and then level yourself up. So that's what I'm here for, is to help you on any level you may be. I want to help. All right. So let's get into it. I talked about the S&P 500 pulling its skirt up, right? Pulling its skirt up. What does that mean? So when I say something is pulling its skirt up, let's talk about it. Let's dive into a chart really quick. And we're going to go over some macro views of what I'm personally seeing with a lot of this stuff. We're going to go over the macro of it. And we'll talk about pretty much what that means to pull your skirt up. All right, family. So this is the ES, which is a futures chart of the S&P 500. And basically, I want to go over and I'm going to do a replay to show you what it looks like to pull the skirt up. Right? This is something I teach a lot of my people in STB because it just makes it makes sense, right, for a lot of people. Now you see these candles here, right? So this one was green, green, green. This one's red. Well, what we're going to do is we're just going to replay these days, right? So now what we can do is we can come in and see exactly what these candles did on the day, right? So here we go. And what we're noticing is, I wish it was a little slower. Let's go back to this one. And what I'm going to do is I'm going to do a replay of these. Maybe we should go to the 4-hour chart. They just popped those out a little quicker than I wanted it to. All right. Let's see if it does it a little bit better. There we go. Okay. So what we tend to see when something's pulling its skirt up, what we see is the stock will fall or the candle will go down and then it'll rise, right? And it's pulling its skirt up. And I want to show you what that means. So watch this. Boom. Okay. Now, this is a day candle. So this is what, the 17th, April 17th? Yes. So it's April 17th. So basically, April 17th fell. And at the end of the day, boom, it popped up. Now, how does that look on a daily chart? Well, here, what you see is we got as low as here. So this is called a wick. This wick got as low as 41.48. Now, when you're looking at it in real time, what it looks like is, it looks like it's going to be a red candle. This candle will be red, and it looks like, oh my God, we're getting ready to fall through the floor. And then what happens is it pulls its skirt up, right? And it lets you see something. And what are we seeing? We are seeing bulls step in. This is bull. I mean, if I've ever seen some bulls, that's a bullish wick right there, right? And what we start to see is that the bulls were stepping in. Look, pulled the skirt up. The next day, it fell even harder, but guess what? Still pulled the skirt up. So what we're seeing is it's pulling the skirt up. Now, do I think this is going to continue? Because that last red candle was yesterday. Is it going to continue, or are we going to go ahead and just take it over? Are the bulls going to just take it over and take it up? Now, I personally see it continuing to the downside, right? May not be today, may not be tomorrow, but over the next few weeks, maybe even a few months, I see more downside. Does that mean we're going to crash through the floor? No, but I see some downside, right? If we look at the macro view, now I'm about to break down a few things. Let's look at it this way. I'm going to break down the macro view of what I see and why I'm saying that I think we're going to fall more, right? And I'm going to put you almost into a scope, into the mindset of me and how I am able to say these things with conviction, with confidence. Like, how can he say we're getting ready to fall? What does he see? Is this a gamble? Is he just going to throw money at it and gamble? No. We are what we call high probability traders, which means I need multiple things that are telling me, yes, we're going down, or if I'm going up, I need multiple things telling me we're going up, right? Now I'm just going to touch on a few today because there's a lot of them that I can cover. I have over 100 confluence points, okay? But we're going to talk about maybe 2 or 3 today because we don't have a lot of time, right? Plus, I try my best not to teach because my teaching, my classes are like 2 hours long. So I don't have the time to teach on YouTube. So we're just going to go through it and have some fun with it. I'm going to show you some things. All right. Now, number one, I want to cover the DXY. Okay. So now we're looking at a macro view of things. Now, the DXY, for those of you who don't know, over the last maybe year or two, and somewhat in history, but DXY tends to move opposite of the market, right? So the DXY falls, you'll know the market, S&P 500, things like that, it goes up. So for example, let's just kind of look at it. For example, March 13th, DXY was falling. Let's go look at the spot, right? March 13th, the spot was going up, right? Or the S&P was going up, excuse me. So March 13th, it did totally the opposite of what the DXY was doing, right? Look here, DXY was going up, January going through into like February range. Guess what? Probably had some type of, mix up going over here, right? Or not mix up, but something opposite. So as it was going up, look at that, February, it pretty much went down all the way into March. So this is kind of how it works, okay? This is how it works. So that being said, now what we can do is we can come in and we can say, okay, what is the DXY doing right now? Where is it going? Because it may be able to help me. And once again, we need more than one thing to tell us where we're going, okay? So I'm going to break down the DXY really quick and then show you where I personally think we're going on the DXY. And then only if, because keep in mind, you can't, a lot of people, I'll say something and I'll say, let's just, for example, I'll say, oh, the market moves opposite of the DXY. And then what happens is people will lock in that always happens. And in this market, nothing always happens. Sometimes it might detach. So what that means is we need more than one reason or more than one thing that's telling us something's about to happen. Because maybe, just maybe, the DXY will start to run with the market. I don't know why I would do that, but maybe it will, right? So I just have to say that for anybody who's watching, do not take this and go, oh, it always runs opposite, because Tay said, no, things change. We have to be aware of that, okay? So what I'm seeing right now with the DXY is we break it down. We have a double bottom here. Double bottom. I like this. This is on the weekly chart. We have a double bottom here. Now, I'm going to show you how I do with some of my, or with a lot of my STB students. When they lose a trade, there's always a reason why. There's always a reason why the stock did something, right? And people, they often come in and say, Tay, I don't trade stocks because, it's rigged and yada, yada, yada. You are not taking accountability. The market is, it can be rigged, yes. But the market is always following a set of rules, right? So when it came down here and it's bouncing, why is it bouncing? Why does that look like a support level? I don't know, because maybe, just maybe, this line was some type of resistance previously. Let's look. Oh my. Yeah, do y'all remember that meme? Oh my God. I can't sing, but that's what comes to mind when I think about this. Look at this. Resistance, 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 resistance. Goodness gracious. Well, what happened to resistance? Well, we got above resistance and they held it at support, support, support. And as we come here, support, support. So for me, this is a long time resistance that was turned into a support line. So I personally see us moving up on the DXY. A move up on the DXY means what for the S&P 500? A move down. Now, Tay, okay, you told us DXY. What else you got though? What else is going to make the market move down? And why does it need to move down? Okay, let's talk about it. Okay. Now, we personally have heard that recessions tend to make markets fall, right? In most cases, right? Now, many people like to use the, I don't know, some people use, I'm not the biggest fan of it, but the inverted yield curve as an indicator for pretty much a recession on the way. Well, it's lagging. That could be a 2-year lag, right? Now there are other things that I like to use, like of course the employment rate, which we'll go over that later. I'll talk about some other stuff later dealing with that. Employment rates, inflation, and the correlation those two have, but also something I like to call the anxious index. I don't like to call it that. It's called the anxious index. And this has been an indicator that has worked for over the last 40, 50, 60 years. Let's take a look at it and let's see what I mean by an indicator that's worked for the last, I don't know, 40 plus years. All right, so let's check it out. All right, here you see we have the anxious index, right? And this is basically 1/4 ahead probabilities, right? 1/4 ahead probabilities of a decline in the real GDP, okay? Now, what does that mean, Tay? What and how does that, I mean, Tay, talk to us. Like give it to us in normal people's, give it to the normal people words, right? Okay, simply put, what this is showing, right? Let's not even focus on this. I just want to give you exactly what it's showing. So I can make it make sense for the 2-year-old and the 200-year-old, right? However young or old you are, this should be able to make sense the way I'm going to explain it. What we have seen in history is recessions be correlated with these probabilities on this side, okay? And what we've seen, so these gray lines are recessions. They indicate recession, okay? The gray lines indicate that we were in a recession. So of course, many of you were born and you got to live out the recession of 2007 through 2009. There it is, right? Many of you remember the 2020 recession. Okay, it was small, but it was a recession. Some of you are, definitely old enough. You probably my age or older. You remember, the .com where we had Y2K and all this other craziness, which created a recession, right? Some of you may not remember this recession, but these are the recessions. Okay, these are the recessions. And once again, this thing goes back to the 70s, just this data. Now, tell you, what does this mean? Well, what we've seen is when the market or this, let's just say when the market or the economy shows us the probabilities going over 30, every time it goes over 30, we get a recession. It's always happened, right? And once again, remember, this is probability. So it's forecasting what could happen because we haven't yet called a recession, but we are over 30. So look at this, over 30, got over, then a recession hit. Look at this, over 30, got above it, then a recession hit. Look at this, we got way above it and a recession didn't hit until like a year after it got to 70. This thing got to 70. And then the recession hit. Look at this. We got stayed above 30 because it was already above it. It came down, bounced, recession again, right? So this was around that crash in 81, 82. There was a crash back then. Look at this, got above 30. So I think you understand now, when we get above 30, there is either a recession already here or it's on the way, right? Above 30, of course, big recession there. Above 30, of course, had a recession in 2022. And look where we are today. We are above 40. Now, this thing can go even higher. We could have a repeat of the 80s. This thing can go way up to 70 if it wants. Then the recession will hit. Now, why is this important? Because when I say, hey, I think the market's going to fall, the DXY just told me that, hey, we got a bounce on the DXY coming. The SPY is telling me, or the S&P 500 is telling me a few things, which we can go over in a second, telling me we need to go down and close some gaps or this and that. And then I have this telling me, hey, recession's coming. You're talking about being ahead. This is it. This is one of those things that lets me see the future before it gets here. So there's not, everybody's been like, oh, well, we've been in recession and, da, 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 da. No, it hadn't hit yet. It hasn't hit yet. And technically we have had 2 negative quarters of GDP. Yes. But until it actually hits, it's not here yet. So with that being said, we can now be in play ahead of time because we know it's coming, because historically, once again, this is a game of probabilities. Game of probabilities. So historically, we've seen that every time it gets over 30, a recession hits. And if you go back, I'm not going to do it here. You got to go do your own homework. If you go back and you look at what happened in the early 70s, so 70 through like 72, go back and look what happened to the stock market when we hit that recession. Go back and look at 74, 75. What happened going into 76? If you go back and you look at 80, 81, going into 82, 83, what happened to the stock market based on what we see right here? If you go back, y'all know what happened in 2007. You know what happened in 2020. Go back and look. So once again, we are here again, and you have a head. You got a foot. You're a step ahead of everybody, because guess what? Nobody really knows this stuff. Now, there was a reason I charge a lot of money to come into STB. I am good at what I do. All right, I am good at what I do. I might not look a certain, oh, where's your suit? And you speak a little different than most people who are smart. Let me tell you something. Don't let the front fool you. Don't let what you see. They say never judge a book by its cover. Don't let that fool you. I'm a bad man. All right. So once again, this is what we're looking at. This is what we do. This is how we are always able to be ahead of the market, because we know a little something. All right. So now what we're going to do is we're going to go over a chart, S&P and maybe even the NASDAQ, and then we'll kind of get out of here. So like I said, DXY. So the DXY is 1. I see it bouncing and going as high as about 107, 108, right? Or 109, excuse me. I see it getting up here, maybe even to close this gap that's on the daily chart. Okay. Number 2, we have the anxious index. Right. Remember, I said I like 3 or more indicators at least. Right. So we're gonna come over here and we're gonna see what's going on with this. Now, for me, once again, I like to find my gaps and close them. Right. And I personally know, and I think we've talked about this before, which is why I left it up. We have gaps that we need to close. Right? We have gaps that we need to close. And what I'm going to do, I like you all to see me chart fresh. So we're just going to start with a fresh chart. All right. We'll go back. We have gaps to close. Hella gaps to close. Boom. There's one there. So, coming back, that's what, over almost $15 drop. Okay. There's a $15 fall there. That's not the only one. I'd like to also see one. See, when you chart a lot, you pretty much memorize where a lot of your gaps are, right? So that's the gap we just saw on the daily chart. I know that there's one way back here. Okay, I'm just gonna have to take it back and knock this out. Boom. Okay, there's a gap here that needs to be closed at 377. See, we got down here, but it's not, it didn't hit it yet, so it's not closed. Right? So gapped up. We need to close this gap. It has not been touched. They call it front running. We have front ran that gap. It did not close. So we still have to close that gap. That is not it. So give me some time. We have this gap that needs to be closed. Some of you all are like, that's not a gap. Say, what are you looking at? Oh, but it is, family. So we have not closed this gap. Look, this line has yet to be touched. Oh, that's not the one. Sorry. No, this line was touched. So that gap was closed. That gap was closed. There's another one. Let's continue. That I know we definitely didn't touch the 360. Yes. So this gap needs to be closed. Now I know for a fact we didn't touch this one, right? 360 has not been touched. So once again, we got some room to fall, right? This is a really quick assessment. There are other things I use. It's not just gaps. I know I'm going to get some smart ass who comes on and say, this guy only trades with gaps, using gaps. No, I have over 100 confluence points. I don't have enough time to teach them all on YouTube, right? That's why I created a course. So you can just go in there whenever you want and you can just go through all of them, right? In your own time, right? And I didn't want to give all of my stuff out because the more you give it out for free, the less it works. Because the more people know about it, the more people use it, the less it works. So there's some things that I just don't teach for free because I don't want it out there and not working anymore, right? So we want our stuff to still work. So that's kind of how this thing works on that end. So this is our third indicator. We have the DXY, we have the anxious index, and then we have these gaps along with plenty of other things. But we have these gaps that definitely need to get closed to the downside. So 360 is definitely something on the board for the SPY, which is the S&P 500 ETF. And then for the QQQ, let's see what we have over here. I'm pretty sure the same thing. So here's a gap. So we want to get rid of that. So here's the gap here that needs to get closed. Oh, not even close yet. So 307. Let's see what else we have. Here's a gap that was closed but needs to be retraced. Okay, that is a rule for people who don't know about gaps. It closes, but it needs to be retraced to 283. It tried right here, but we didn't get it. So 283, as far as I'm concerned, on the QQQ. Okay. What else do we have for the QQQ? Let's see. Was that gap closed? Okay, this gap was closed. We saw that. All right. All right. I'm going to go back just a little bit more because I think it's a few more on the NASDAQ. Let's see. I feel like it's maybe one more back here somewhere. But nonetheless, we have a fall also in the QQQ that we need to take, right? I don't want to spend a lot of time looking for this gap, but we have a lot of confluence for the overall market to say, yeah, we need to pull back. We have a pullback coming. I want to say it's inevitable, but it kind of is, right? It's inevitable. What we need to do is align ourselves with the economy, the charts, and the conditions, right? A lot of people in the market don't know that the market is pretty much ran by human psychology. It's ran, are you scared, right? You know, you got the fear and greed indicator. Are people scared? Are they fearful? If they are, this thing may not fall because a lot of people have been told to buy when people are fearful, right? So you may have some dip buyers coming in. Who knows? If it's at greed, I personally think that's when it falls the most. When it's at greed, because they never tell you when the market's going to fall. It's one of those things where it's like, oh my God, we're doing great, doing great, doing great. Boom. They're never going to let you know when it's going to fall. Okay. So I hope this was helpful. I hope this was another great STB market watch. And other than that, You all have a great rest of your week. End this thing on a great note. It's Friday. We're going into the weekend. And hey, I'm going to take the weekend off and I'll see y'all Monday. All right. All love, peace, and blessings to everybody. I'll talk soon. So with that being said, family, if you are looking to become a little bit more serious with your trading, you want a little help, or you just want a community of people, like-minded people at that, who are going through some of the same things you're going through. You want a little direction. You want to take advantage of the AI that we have, because we get insider trades, market news. We get to see when the big dogs, people with 100 million, 200 million, $1 billion are buying things. Not only that, we can go in here and put in commands, right? So I'll re-enter this command. So I can put in a command and see what the AI actually thinks about what's going on with the market, right? And it'll tell me, hey, our predictions based on what the AI is seeing with the overall market, we think the market is about to fall. You see it's red. So this just gives us another edge as traders, investors, because we do swing trades, we do day trades, and these alerts have been fire. As you see, we got plenty of profits, right? So everybody should have access to the profits section. We have plenty of profits, but not only that, we have other things that we can go into and, pretty much share what we're going through. So we have the mindset section. We have people who are showing the workouts. I put in the nutrition plans, right? For those of y'all who've been wondering, hey, how did you lose all the weight, right? I've added my nutritional plan here, but I've added the workouts here. I've added the nutrition part here, right? I've added so many things, and then we have the come up series where people are saying, look, this is my come up story. This is what I've been able to do. This thing is literally packed with people who are just like-minded individuals who know what's going on. And ultimately, we get to the bag, because it's more than just trading charts and looking at certain balance sheets for companies. It's an overall thing. So we do the mindset, we do the workouts, we do the nutrition, we talk about the family issues, right? See, I mean, we have it all. I've thought of, for the most part, I think for me personally, I've thought of it all. So we have it all. We come in here and we stay in here. This is what it is. And we trade out of this place. So once again, it's only $50 a month. It's super reasonable. And I'm not gonna lie, I may take it up pretty soon. But for now, it's $50 a month. I definitely suggest, take advantage of it if you want to be better or do better, or just want that community and access to the tools that we have. I've put it all here, family. So I definitely hope to see you on the inside soon. And other than that, I'll see you on the next newsletter video.
Secure the bag, yeah, that's the brand, and we get to the bag. These